We have Mr. Sunil Reddy, Managing Director at Dodla Dairy, is with us. Is of course a recent listing as well. On the other hand, the Q3 numbers are also looking in muted. So what has been the demand for Q3, especially Jan, for value-added products? Give us what has the emergence of Omicron done to your business so far?
So thank you very much for getting me onto your channel, sir. Omicron's impact has been there because of the curfews that we've been having on the weekends in certain places of majority of the markets that we are operating. On the value-added products trend, seasonality-wise, always October, November, December is a lower offtake because of the colder weather, and added to this year's strong rains, there's a slightly lower in terms of value-added products. But in spite of that, we have achieved 16% growth in revenue year on year and a 2% quarter-on-quarter growth, sir.
Sunil, that point is taken, but talk to us about your operational performance, because the margins have definitely contracted this quarter. Was it on account of the higher procurement cost? And going forward, can this 15% revenue growth run rate continue?
The run rate of volume-wise, yes, ma'am, I think we'll be able to manage this run rate and keep the growth of volume at the same level. There might be a marginal 1% this way, that way, depending again on Omicron or whether it goes up or comes down. Coming to our procurement prices, yes, procurement prices have gone up, but we have been able to compensate it by entering into Maharashtra for our procurement, where we've done a good job and we've been able to get our procurement going there, which will, the full impact of which will come in the current quarter as we're going forward. And also we have taken our price hikes in the month of Jan, which will also be coming into effect for the full months of February and March, which will keep our margins in the double digits.
Right. Can you just talk to us about how is the company managing with the hyperinflation across board? Is everything being able to pass on?
Yes, sir. We have been able to pass it on to the customers, and as I said also, we have compensated it by improving our procurement from Maharashtra state, which were not there earlier, which gives us a little bit of a price advantages to our newer plants that we have operated, which makes our raw material price at landed cost of the plant more effective for us. And that is the reason why our margins will also keep steady in spite of all the other issues that are coming up.
Margins will hopefully stabilize going forward, but talk to us about your expansion plans as well. What's the market share like in the southern markets, and how are you looking at growth in southern India as well as international markets?
International markets have done well, ma'am. If you look at our markets of Uganda, we have improved tremendously compared over the previous years, that we have now reached volumes of almost 88,000, 90,000 compared to our previous quarter, which was around 60,000 liters. This has been predominantly due to our strong improvement in our market share in Uganda. We are also focusing in seeing how well we can take up the same increase in Kenya as we go forward. If you look at our share of market, we get a majority share coming in from Karnataka, which is around, for our towards our revenue is around 40%. AP is around 34%, and Tamil Nadu is 16 and 10. We are hoping that we'll be improving both in Tamil Nadu and Telangana marginally by volume, and also continue to maintain a larger share in Karnataka. Our focus has been by using our own direct retail parlors, as we call them, to give us entry into wherever we're finding it difficult, and with that we will be continuing our growth in volumes.
All right, sir. Thank you so much, sir, for taking out time for us. Always good talking to you.